The Bank of England just issued a terrifying warning. A financial crash is coming, 2026. The Bank of England doesn't usually shout. It doesn't panic. It doesn't sound alarms unless something is seriously wrong. But this week, it did. A rare, blunt, almost shocking warning. The UK is heading toward a potential financial crash. Not a slowdown, not a correction, a crash. And if you think this only affects banks or hedge funds, think again. Because the Bank of England is talking about your mortgage, your savings, your pension, your job, and your future. Felix Exposé is here. And today, we're breaking down exactly what the Bank of England just said, what it really means, and the terrifying chain reaction already starting beneath our feet. This is not fear-mongering. This is what the data says. This is what history says. And this is what the Bank of England itself is now saying. Let's begin. Section 1. What the Bank of England just admitted, and why it's so alarming. The Bank of England recently released a financial stability update, and buried inside the technical language is a message that should worry everyone. 1. Debt levels have reached critical vulnerability. Households are borrowing more while earning less in real terms. 2. Corporate defaults are rising. 3. UK banks are exposed to risky mortgages and falling property values. 4. Global shocks from China to the US are spreading fast. 5. Liquidity in key markets is drying up. This is how crashes begin. What the Bank of England is really saying is this: we've tightened too much, too fast, and now the system is starting to crack. And when central banks openly admit instability, it means the situation is far worse behind the scenes. Section 2. How we got here. The road to the 2026 crisis. To understand why the bank is sounding the alarm, we need to rewind. Stage 1. The money printing era, 2020 to 2021. During COVID, the UK printed hundreds of billions of pounds, pumping it into the economy. More money chasing the same goods equals inflation explosion. They created the problem. Stage 2. The inflation wildfire, 2022. Energy shock, food shock, housing shock, war shock. Inflation peaked above 11%, the highest in 40 years. The Bank of England waited too long and then slammed the brakes. Stage 3. The interest rate hammer, 2022 to 2024. Rates skyrocketed from 0.1% to over 5% in record time. For households, it was brutal. For businesses, disastrous. For banks, toxic. Because every rise in interest rates pushes someone, a homeowner, a landlord, a business, closer to default. And defaults spread through the system like cracks through glass. Stage 4. The 2025 breaking point. This is where we are today. Mortgages resetting. Businesses closing. Consumers maxing out credit cards, record numbers relying on food banks, property prices stagnating or falling, banks tightening lending, government debt costs exploding. The Bank of England finally admitted the system is under severe stress. No more sugarcoating, no more soft language. The storm has arrived. Section 3. The 7 warning signs of a financial crash already happening. Let's break down the signals the Bank of England is watching, the same signals that preceded past crashes. First, mortgage defaults are creeping up. 2 to 3 million UK homeowners are coming off fixed deals soon. Many will see payments jump by £300 to £600 a month. When people can't afford mortgages, the housing market cracks. Banks get hit. Confidence collapses. 2. Commercial property is in freefall. 3. UK government debt is becoming unmanageable. Debt interest payments now cost more than schools, defense, policing. A government with no money becomes desperate, and desperate governments make desperate decisions. 4. Consumer debt has surged to all-time highs. Credit cards at 35% APR. Buy now, pay later exploding. People borrowing to survive. When consumers are maxed out, recessions turn into crashes. 5. Bank liquidity is shrinking. This is the scariest one. Liquidity is the oxygen of the financial system. When it drops, as the Bank of England confirms it has, markets suffocate. 6. Job losses are rising. Layoffs are spreading. Tech, retail, construction, transportation. A wave of unemployment hits spending, which hits businesses. which hits banks. 7th, global markets are flashing red. China's real estate disaster, US bond market instability, European stagnation. Crashes rarely come from one place. They come from everywhere at once. Section 4. What this means for you, the brutal reality. A financial crash doesn't just hit markets, it hits ordinary people. Here's what could happen next. 1. House prices could fall 10 to 25%. With mortgages unaffordable and demand collapsing, housing is exposed. If you're buying, opportunity. If you're selling, trouble. 2. Unemployment could rise sharply. Businesses drowning in debt will cut staff first. 3. Personal debt will explode. People will take out new loans to survive. But rising interest rates make those loans deadly. 4. Pensions and investments will take a hit. Market downturns equals shrinking retirement funds. Many will see years of savings evaporate. 5. Smaller banks are at risk. Not all banks are equally strong. When liquidity dries up, weaker institutions buckle. We may not see a repeat of 2008, but regional failures are possible. 6. The government may raise taxes or cut services. To cover their exploding debt costs, they'll look to your wallet. Section 5. Why the Bank of England is speaking up now. Because they know time is running out. They see the data we don't. They know which banks are stressed. They know which sectors are collapsing. They know how fast the cracks are spreading. Central banks warn the public for only 2 reasons. 1. To prepare you, so the shock doesn't destroy confidence completely. 2. To protect themselves, so they can later say, "We warned you." This announcement isn't meant to calm markets. It's meant to protect the Bank of England's reputation. That's how serious this moment is. Section 6. The 3 scenarios for 2026. Let's break down the likely outcomes. Scenario 1. Soft landing. Least likely. Inflation falls smoothly. Rates drop. Economy stabilizes. Maybe a small recession. This is the fantasy scenario politicians pray for. Scenario 2. Hard landing. Very likely. Big recession. House prices fall. Business bankruptcies spike. Banks tighten lending. Unemployment jumps. This is the scenario the Bank of England is preparing for. Scenario 3. Systemic crisis. Worst case. Not 2008, but something serious. Bank failures. Credit freeze. Sharp deflation. Market slump. Government emergency measures. The Bank of England is not predicting this, but their tone suggests they fear it. Section 7. What you can do to protect yourself. Here is where Felix Exposé steps in. These are not financial advice. They are general principles used during every major crisis. 1. Lower your debt exposure. Interest rates are still high. Any unnecessary debt becomes a liability during a crash. 2. Build a cash cushion. Crashes create opportunities. Cash equals power. 3. Diversify your assets. Don't keep everything in the same basket. Cash, precious metals, stocks, real estate, business income. Diversification is survival. 4. Strengthen your emergency income sources. Side income is no longer optional, it's essential. 5. Be prepared for stealth taxes. Governments under pressure raise revenue quietly. Removing allowances, freezes on tax brackets, council tax increases, expect this. 6th, stay informed, then stay calm. Crashes destroy the unprepared, but they make the informed wealthy. This channel exists for one purpose, to help you see what others ignore. Conclusion, the Bank of England rarely warns of crisis, but they have now. They see the storm, they feel the tremors, they know what's coming. But here's the good news, you are not powerless. Knowledge is your shield, preparation is your weapon, and crisis, for those who understand it, is opportunity. This is not the end of the story. This is the beginning of the next chapter. And Felix Exposé will be here to guide you through every step, every warning, and every opportunity the mainstream media refuses to discuss. If you found value in this deep dive, hit like, subscribe, and join our community of people who think for themselves. Stay safe, stay sharp, and stay ahead. This is Felix, signing out. See you next time.